Hello everyone, welcome to Fisk Capital. This is our second part of Zen Technology's stock analysis. If you haven't seen our first video, then I would request you to go back to the first part from the link or from the card and first visit there, because there we discussed about the business analysis and basics of Zen Technology. Now we are going to the future prospect of Zen Technology using their multi-growth opportunity program. So Zen Technology has a multi-year growth opportunity. It is driven by government projects as well as exports. If you look at the India's defense budget, it is 6.1 lakh crore in FY25. This has increased and is continuously going to increase every year. Zen, being one of the key defense player in virtual simulation and anti-drone technology, is going to capture a significant orders available for anti-drone technology as well as virtual simulation. Now, opportunity in India from anti-drone market itself is rupees 120 billion. As the government pushes for comprehensive drone defense system across 12,000 kilometers of India's border security. You would have seen a lot of time people talking about drones capturing the Russia-Ukraine war. A lot of war is being fought on drones rather than tanks. So obviously, this is going to be the futuristic theme. Zen already has a 35 billion rupees of order pipeline, of which 12 billion rupees is already expected to materialize in this FY25. So there is a continuous clear order book in the near future, as well as there is a good vision to see that it is continuously going to go for next 5 to 10 years when it comes to order pipeline of Zen. Now, if we look at the export segment of the company, they are targeting $25 to $50 million in US defense contracts. This will help them in expanding their footprint beyond India. They are already started doing it in US and UAE, but they want to be key player in US defense as well. Now, looking to the business model, they are already in a high margin segment, but to ensure that they will have a continuous stream of revenue, they are also adding some recurring revenue model in their business. The key part of this is their annual maintenance contract. As we have already seen that these are expected to generate about 120% of actual cost, actual equipment value in a 10-year life cycle. So what will happen is that once Zen has done a deal and sold their systems to the client, they will have a clear vision that they are going to get about 100 to 120% of the income which they are getting from selling these technologies in a 10-year life cycle. So that will improve their cash flow stability, it will reduce their revenue volatility, and therefore they will have a long-term profitability. And this kind of annual maintenance margin are generally quite higher. They are 80 to 90% compared to product sales, which has a margin of 40 to 50%, because they are kind of a specialist people who are doing this maintenance. So there is less competition and they can determine what price they want to charge for annual maintenance. Now, if we look at their financial outlook, there is obviously a hyper growth phase till FY30, which we have already seen. So, as per our analysis, Zen is expected to maintain a very strong CAGR for FY24 to 27. It is based on the robust order flows. It has a new product launches upcoming, and they are also expanding to the international market like US. So, the revenue growth trajectory is going to be very high in 24 to 27. Then 27 to 31 it is going to stabilize, and after 31 you will see a 7% kind of growth. So what happens post 2030 is the company size would be so massive that even big contracts would only impact 5 to 10% of growth, max to max 11-12% of growth. And that's why in the later years beyond FY 2030 we won't see a huge rise in their revenue like we are going to see in the next 3-4 years. So looking at these metrics, we have done a projection of their revenue growth starting from FY 25-26. It could be 133 and 39%, and slowly and gradually it will reduce to 9% in FY 32, and terminal growth will be 7%. Similarly, their PAT margin is also going to go down from 28 or 27% in near future to 24% in the long run. And you can see the ROE of company will also go down from 31% to 25%. But even a long-term terminal ROE of 25% is quite good. It gives a very solid foundation of the business, and gives a lot of confidence about the future of the company.
Are you tired of losing money in stock market? Buying at the top, selling at the bottom, following random tips and losing money? Well, stock market looks very easy, but smart investments require experience, strategy, and discipline. At Fisk Capital, we help you invest in the right. We provide research-backed recommendations, tried and tested strategies, and personalized investment plans. From small investors to big investors, from retail to HNI, all our clients trust us with all their investments. So the question is, are you going to rely on the guesswork, or are you ready to start investing with expertise? Contact Fisk Capital at the below given number and start your investment journey now.
Now we have done valuation of Zen Technology. Based on the valuation of FCFE model, using the data we have captured for net income and revenue growth, company valuation in today's term is 725 rupees. So the intrinsic value in 2025 is 725, and even in 2030 we are expecting it to be somewhere around 1278 rupees. It's not the share price which I am talking about. I am talking about the intrinsic value. Similarly, if we look at the DDM based valuation, it is slightly higher, going beyond 1000 in 2024 itself, and then by 2030 it will be around 2000 rupees plus. Now we generally prefer FCFE valuation over dividend discount model because it accurately reflects the ability to generate free cash flow. However, you are free to choose anything which you like. If you look at the current price of Zen Technology, it is already 1461. So being a high growth stock and being quite spoke about in the market, a lot of people are buying Zen. However, if we go by our analysis, we don't see much upside. Whatever we are going to see in 2030, people are already paying for it today. So based on our valuation and analysis, this is not a share we are going to buy at any moment. Although if you are a very aggressive growth investor, this is something you can look forward to. But still, I would suggest take it as more like option, that fair valuation wise you are not going to earn much. But if the company grows much faster than what we have assumed, which is in our assumption also the growth is quite high, 25 to 30%. But if you think it is going to surpass that, then I think you can think of it. Now looking at the company investment positives, like why people will keep buying it, and therefore if you just are the person who doesn't believe a lot on intrinsic value but make your decision based on the investor interest in a particular stock, there are so many investment positive. Like people will keep talking about Zen because of defense tailwind, about 120 billion rupees of anti-drone market leadership in India in simulator market. Then there are high margin AMC revenue, then there are US expansion, and then there is a government preference to buy indigenous companies product. The risk is obviously there are going to be order execution delays. Government may shift their focus from defense to some other avenues if they feel like globally there is less threat, and they have done a lot in the defense sector. There is also going to be a lot of this tariff wars, etc. And to curb that, Indian government may prioritize buying from US, which we have already seen in the recent developments. So in those cases, India, unfortunately, government has to prefer the US defense manufacturers over Indians and anyone else, so that the other sectors of the country can avoid such high tariffs which US is threatening to impose. So obviously that's going to be there, and then there is a competitive pressure. In India, Zen is obviously a leader, but in globally, you will see Lockheed, Bay, Saab, all these kind of competitors, and therefore it is difficult for Zen to compete when it is going to go for export expansion and trying to make a global footprint of the company. Again, there is a high working capital requirement for the company. This is a working capital heavy business, and then they are also they are also doing a lot of acquisition in defense sector, buying some small players to diversify and expand their offerings. And when they are doing it, they are doing mostly by raising equity. So in such deals, the ownership of existing shareholder gets diluted, and therefore also what we are suggesting is to avoid this stock, because there isn't much you are going to get as a shareholder in all this growth story aspect of Zen. So our conclusion is that the valuation wise, this company is not something you should buy. Although it's a very high growth stock, so if you are already having it, you shouldn't sell it as well at just this moment, because there is also a case that it has come down significantly from 2000 plus levels. So the best thing for you to do is hold it if you were too much optimistic about their growth story, but don't go and buy if you are not buying. This is what we are recommending, and this is just based on our analysis. Investments are subject to market risk, so do your own analysis. And if you like this kind of analysis and you want to make investment decisions based on this kind of stock recommendations, then do reach out to us and take our subscription services so that you can get such kind of stock analysis of many more stocks. It's obvious that we are not going to share the stocks in this kind of videos which are going to give a lot of returns, which has a lot of potential. Mostly in these videos you will see a weak buy or a hold kind of stock. There are very strong conviction buy you might see in this kind of analysis video, because they are only for the premium customer who are paying us to manage their money. So to reach out, you can contact us at 9039184797. So our contact detail is also mentioned below. You can reach out to us via emails and contact number, or you can mail us at sales@fiskcapital.in. Thank you very much.